Awesome, awesome. All right, guys. So this is BYOB basics, right? That is what tonight is. We are talking about BYOB basics. And so what we're going to do is first we're going to talk affirmations, okay? So we're going to take this down to the very, very basics. You guys get to have fun with me tonight, right? You guys get to hear from me tonight. So Miss Anderson is not on the line this evening, but I'm going to walk you through the BYOB cash out strategy. And definitely, okay, Duval, okay. Jacksonville, I see you guys. So definitely want to be able to walk you guys through the understanding, the information, right? Definitely want to be able to do that. And so what we're going to do is really just break down from a understanding standpoint tonight. And so what I want you guys to understand is I want Q&A tonight, okay? I want Q&A. We want to make sure that you understand the strategy. We want to make sure you understand how to see the charts. We're going to keep it basic tonight, okay? Thursday night is our advanced call. This has been a Power Pack Tuesday. So let's talk our affirmations first, right? Let's get started here. I see you guys, Cleveland. I see you all, right? I see you still logging in. We're going to go ahead and get this call started. Now let's talk about what's the most important part. This is not statistically proven, right? There's no statistics behind it that I've looked up, that I've researched. But what I honestly believe that 80% of your success is your mindset, right? This is why we start our call with affirmations. This is why we start our call with mindset. This is why we start our call with focus. This is why we start our calls this way. And so, yes, this is going to be a part of your basics, right? This is definitely going to be a part of your basics. It's understanding, your mindset and why we do these affirmations. So let's talk about that for a minute. Let's really talk about that. And then we're going to walk you through the BYOB cash out strategy, right? That's the simple part. The trading, to taking the trades, analyzing the charts, that's the easy part, okay? Your mindset is the part that you have to focus on, is understanding that this is something that you can do. You have to believe, right? You got to have that faith that you believe. You have to be able to say what you want. This is why we do affirmations. So I have faith that I'm a master trader. I have faith that I can believe. I have faith that I believe that I can do this. Then you have to say what you want. And you have to really believe it. There is no such thing as all my trades end in profit sometimes, right? Or one day I will be, one day I can be, one day it might be. No, you have to really believe. What do you believe? You cannot operate in doubt, right? You have to walk this, understand this, believe this thing. And then you have to have no doubt. And then guess what? It's going to happen. So let's say that again. You got to have faith. You got to say what you want. You have to really believe. You have to have no doubts. And then that is when it's going to happen. And now you understand why it's really so important that when we start these calls, now you understand. You see, you cannot waver. You cannot be sometimey. You cannot operate in that mindset or that skill set. You have to believe and commit. You have to understand that your life is worth it. You have to understand, just like I said on our broadcast today, you have to understand you're going to trade your life for something. Every single day when you get up, you're trading your life for something. You have to respect yourself enough to know that you're worth it. You have to respect your life enough to understand that you're going to trade it with something of value. And this is why those affirmations are important. What are you willing to trade your life for? Are you trading it to build and generate somebody else's wealth, someone else's freedom? Are you willing to trade it for yourself? Because every day we trade our time. Every day we grow a day older. So what is it you're willing and wanting to do, right? And so let's think about that. I am an educated BYOB master trader anointed for wealth. I am the signal. all my trades and in profits, I am 777. All right. And yes, I am an BYOB average breaker. Now, you see, I've already added that to my affirmations. So yes, I am, because I don't operate in average. I excel, I exceed. Anything that I say that I'm going to do, it's going to get done. And so we want to make sure that we operate in that mindset and that skill set. And I love how you all add to, right? Yeah, and no, we have not forgotten those $100 plus days. So yes, $100 days, we do that, right? We do that. And so we want to make sure. So now, ladies and gentlemen, we're definitely going to go ahead and dive in and get started. But if this is your first time on the line this evening, if this is your first time with us, let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. Awesome, awesome, awesome. So welcome, welcome, and welcome back. So for those of you all who are new to the call, I want to make sure you understand how we operate and what it means to be a BYOB educated trader, right? An educated trader is a profitable trader. That is the foundation that we operate on, right? That is the foundation of who we are, is understanding that a BYOB trader is a profitable trader, okay? And when you understand that, when you know that, okay, you understand that everything you do is an excellence. We operate in nothing but excellence. And so that's where your mindset has to be. So what we do is we commit to ensuring that our platform, our success, all you have to do is plug in. I promise you, commit to yourself, be willing to do the work and plug in. So Monday through Thursday, 5 a.m. and 9 a.m., those are our profit calls. Tuesday, here we are, BYOB basics. And then on Wednesday is our BYOB cash out, HFX simplified. And then on Thursday is where we go deep. This is where, we dig into the market, okay? That is what we do. And so now what I want you guys to do is what we're gonna do tonight is I mentioned that tonight is basics. So I'm gonna hang out on the 15-minute chart. I want to answer your questions, okay? I want to make sure that you understand what's happening and how you see the market. And look, we just got a trigger on the one we're looking at. So we're just gonna take it slow. I'm gonna walk you through it. We're gonna make sure you understand it. And if you have questions as we do this, you need to drop it in the chat, okay? Definitely want you to drop it in the chat and your questions are going to get answered. So now, all right, let's really dive in. So when we pull up a chart, this is what it looks like, okay? Let me reset the chart. When you pull up the chart, that's what that's the chart. So this is what you see. You have to be able to take that and turn that into profit, okay? And the BYOB cash out, so you have complete clarity and understanding. The BYOB cash out, what it does is, you've heard people talk about trading in the past, okay? We've heard people talk about, price action trading. And so I want to make it make sense for you this evening. So what price action trading is: price, market. I'm gonna say that again. Price, market. Now you have a thing where there's a naked chart, okay? A naked chart is what you see. Actually, a naked chart would kind of, not hollow, I didn't mean to do hollow. A naked chart would look like that, right? That's like that, actually. And so what tends to happen is, what a lot of traders do is they add to, right? They come in and they'll add like a moving average. They'll come in and they'll make sure they focus on those support and resistance lines. So now you beginning to understand why the BYOB cash out is so accurate. So I'm gonna walk you through that first and foremost, because I want you to understand exactly where we're operating, right? I want you to understand why we have such a high success rate, why the strategy in itself, BYOB cash out, is so profitable, and so successful. And so as we look at this, okay, we're looking at our stochastic. So I just told you pretty much in a nutshell what price action was, okay? So when you look at this is what we call a stochastic. A stochastic is a leading indicator, okay? It is a leading indicator. A stochastic is a momentum indicator, all right? What a stochastic does is closing price, moving averages, and it basically takes what we've done, how the market's operated on this right here on this time frame, because you notice that the stochastic is in different places on every time frame. Not gonna get deep into that tonight because I want you focused on the basics. You have to build on a foundation, but I want you to understand what the stochastic is, okay? Now, here we have our Hikanashi candles. So we look at trends. So if I am a price action trader, I'm looking at the trend of the market, okay? I'm focused on the trend of the market. Now, these are what we call trend candles. Now, you notice over here that there are two prices, and one is the actual price of the market. The other one is the trend price from the Hikanashi candles. They're very close this evening. They're only a pip difference. But I just want you guys to know why these two prices are here. And so these are trend candles. They're lagging though. So that's why it's a little difference of the price, okay? And now if you add your broker spread into that, then of course you'll see something different. But right now I'm kind of focused on helping you understand the big understanding and exactly what these indicators are that we use and why they use them. And then of course we have our PSAR. These are dots. This is what you call a dynamic support and resistance line, all right? Is what you call a dynamic support and resistance line. That means that this moves with the market. So support and resistance run from one side to the other. One side to the other. You notice when we come over here, we grab what's called a horizontal line, and it moves from one side to the other horizontally. Now, this one you notice are moving with the candles. And so it's a trailing, it acts as a trailing support and resistance line is really what it does. And so as it moves with our candles, that's why it's considered a dynamic support and resistance line. So now you understand what is price action. What do we look at with price action? We look at support and resistance lines. We look at trends. And you see a lot of people using moving average, which is actually in here, all right? So that's actually a part of this. So as I'm looking at that, right, as I see that, now you understand why it increases the accuracy rate. So what Byobcashout, what I call it, is price action with a twist, because price action trading is about 60-70% accurate. And when you add these indicators, what happens is it increases your accuracy rate. And when we back tested it, it was at a 92% accuracy rate. So I'm gonna just kind of look at this. And so we're gonna focus my leading indicator, my lagging. Now, what has to happen is I'm gonna actually see, let's look, Euro AUD triggered as well. So let's look over here. Let's kind of look. So I like how this one looks a little bit better, because I want to make sure we have some new people on the call. I want you to see the smoothness, okay? I want you to see the smoothness of the chart. Actually, let me see. No, I'm gonna leave it there. All right. So I'm wanting you to see the smoothness of the chart. And if you can see the smoothness of the chart, because everything is not always as smooth. So you can kind of see this one kind of looks like that one. We kind of got that AUD pair with it. But when we looked at the other, don't look at this. This is from our morning calls, right? I want to make sure it's up. You can kind of see it's not as smooth. And so for training purposes, I want to make sure that I'm pulling a very, very smooth chart for you to look at and really kind of dive in here and, just kind of understand what you're looking at. So we're going to start on a 15-minute chart. Once again, I have my stochastic, I have my Hikanashi candles, and I have my PSAR, right? So those are my 3 indicators, okay? My 3 indicators that we have and you know that we're looking at. And that's what makes up the BYOB cash out strategy. So now I'm looking at my stochastic. Now what I'm gonna do is actually, we can look at this one and we can look at this one. So let's look at this sell, and then we'll come back over here and look at this buy. As I go through this, questions, comments, testimonies, drop it in the chat. That is the actual purpose of tonight's call. The purpose of tonight's call is to make sure you understand the concept and you understand what you're looking at, okay? We want to make sure you understand the concept, and we want to make sure you understand what you're looking at, okay? So you can push the button, you can take trades with success. Now, there are levels to this, okay? There are levels to this where we're going from understanding the strategy, understanding time frame confluence, understanding support and resistance, right? And then, of course, that top-down analysis approach. Now, get up, make sure you're on a 5 a.m. call. We're going to go over that top-down analysis. Tonight, I want to make sure you understand from the 15-minute chart. Now, why do we start on the 15? Now, I don't want you guys stuck on the 15, okay? I don't want you guys hanging out on the 15 where you think that's the only thing that you can do. Every time frame plays together. Every time frame works together, okay? Each one has a specific function, but they all work together. But yet, here on a 15-minute chart, and down is where I do my entry points. It's where I tighten up. It's where I kind of dive in. The higher time frames give me my direction. It helps me understand what the market's doing, where the market's going, right? It gives me my direction, okay? That's where you're looking at your market structure, what's happening. Now, there is structure inside of structure. We'll get to that later. But I want you to understand that every time frame works together and plays together. So here, let's talk strategy. So now the stochastic, what we're always looking for, now remember, this is my leading indicator. Very, very important. If you want a 5 a.m. call, a 9 a.m. call yesterday and today, you found out just how important it is as we analyze those charts. So, but my stochastic is leading, and I need that crossover and cross down. Now, it's the blue line that's important, okay? That blue line has to cross that red and cross down. Or you see over here around this 20, it has to cross over and cross up. So I'm crossing over, crossing down, I'm crossing over and crossing up, okay? It's gonna happen around the 80 or around the 20. And just so you understand, behind it and the understanding, that blue line is what we call a stochastic fast. That red line is a stochastic slow. So that blue line is important because each one of those lines measures something different within the previous charts, right? It measures something. So it's one is measuring market rate, one is measuring, you know, the last 3 candles of the stochastic slow, like the last 3 candles. So understand that they're different, but yet they're important. What you just need to remember is that blue line is the fastest one. The blue is fastest. So the red is slower. Normally red means stop. So if that helps you remember, we're not stopping the trade, but just think about it from the fact that the red is mean stop. So it'll be behind it. It'll be slower. All right. Now it's not green, but you know, blue is the faster one. Blue is the one that's leading the red. So even though this is my leading indicator, inside of the lead is a lead. The blue is leading. The blue is the one that is like that decision maker. The blue is the one that has the authority. So that blue line, yep, Speedy Gonzalez, exactly. Blue is Speedy, exactly. So if you see it sometimes where the blue is pulled way out, the blue is moving, like the blue is just pulling and pushing, then obviously there is a lot more momentum in that trade, okay? So here, because sometimes it happens, you see right here, we have a blue line crossing over the red. So now look at this, blue line crossing over the red in a downward momentum. And over here, that blue line is crossing over the red in an upward momentum, okay? So let's look at this sell. Let's look at this sell. Now, as we look at this, okay, this tells me that I'm looking for a sell. So let me do this. And now this is what the chart looks like, you know, you log onto my calls and you see our charts end up looking like coloring books. I don't like coloring book charts. We need coloring books, but I don't like them, you know. And I'm saying that because I can't start you here. I can't start you here because you're going to be like, how did you get there? What does all of that mean? I have to start you here. All right. Now we're going to end up with a coloring book, but I have to start you here. So now that blue line cross over the red, and what I'm going to do is I'm just going to put this line here, okay, where this crossover happened, okay? This is where that crossover happens. So now what you're seeing is, and so I'm going to zoom in the charts, okay? When you get on the charts look like this, okay? You have to get a good view of the charts. You cannot analyze a chart like this. You have absolute no idea where you are. Where are you? Where are you at? I want you guys to get in the habit of squishing up the charts, looking at it like this, and spreading it out. Okay. This is what I need you. I need you to spread in it and zoom in, zoom out, zoom in, zoom out. Okay. And so now I'm going to zoom in so you can see the candles. I want you to be able to see the candles. But when you have your charts like this and you're looking at this, no, ma'am, no, sir. Because you cannot see the big picture. You have to be able to see what's going on. Like you have to. So here, blue line cross over around this area, right? You can kind of see where that happened. Now, after that, I need to start evaluating my candles. Once again, I'm on the 15-minute chart. Yes, I'm on the 15-minute chart. On the 15-minute chart, what has to happen, and why am I here? Because I can do 10 pips and cash out. Do not hear me clearly. Do not do anything else until you understand support and resistance. And then you'll begin to see how time frames play together and everything else. Because only here is where I can do 10 pips and cash out. That's it. Okay. That's it. 10 pips and cash out are to my support and resistance line. It's no such thing as, oh, I'm on my hour, let me do 30. I'm on my 4 hour, let me do 50. No, ma'am, no, sir. Okay. 15-minute, 10 pips. Okay. Now, here, you're looking for that red candle with a flat top. I need a flat top candle. I have a flat top candle right here. So you see how we're starting to connect the dots and start coloring? So we turn it into a coloring book. So here, I have that red candle with a flat top, but I don't have a PSAR. Make no assumptions on a PSAR flip. Make no assumptions that the PSAR, now when I say PSAR flip, let's break that down too, okay? That's this dot, bam, 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 right? It's either gonna be on the bottom or it's gonna be on the top. It's never gonna be both. Now it's associated with each candle, but it's not tied to the candle, meaning, look, you see that right here, I ended up, then it flipped to the top. So I was down here, now I'm up here. I was down here, now I'm up here. So I was up here, now I'm down here. You see that there is a dot per candle. It's either at the top or the bottom. So just because it looked like we were getting into alignment right here does not mean we're in alignment. Okay, I need that dot at the top. Okay, it is a trailing stop loss. It is a trailing support and resistance line. Okay, it acts as a stop loss. So I just want to make sure you guys understand that. So now this is my strategy. This is the BYOB cash out. Now, because I always forget it, I'm gonna talk stop loss first. Now, you always trade with a stop loss, okay? What is a stop loss? It stops the loss. It's the name, the definition is in the name, right? I said it's a 92% accuracy rate. What does that mean? There's an 8% out there. So, right? So you want to make sure we mitigate our losses. We want to make sure, we practice proper risk management. We want to make sure that we operate in excellence. We want to make sure we're utilizing it. Now, it's never on. I just told you that this is a support and resistance line. It's just moving with the candles. So it's acting as a trailing support and resistance line. For example, I'm gonna come back over here to my busy chart, right? My one is already colored. So you notice that all of these lines, without me getting into too much detail, join us in the morning, but without me getting into too much detail, each one of these lines, right? Each one of these represents a support and resistance line. You notice that if you were doing what we started talking about, price action trading, you would never put your stop loss on these lines. Never. We never do that. We always put it above or below. Well, let's come back over here. Let's talk about above or below. It goes above the PSAR. It goes below the PSAR. If I'm buying above the PSAR for a sell, below the PSAR for a buy, okay? Above or below, never on. We do not put it on. So now you understand why we don't do it, because it is a trailing support. So if we're trailing, for example, look at how this PSAR is moving with the candles. So you notice that sometimes, and if you're new, you will know, for those of you all have been trading a while, when we say secure your profit, you're always keeping that stop loss. If you're moving your stop loss up, if you're trailing it with you, you're always keeping that above the PSAR. So I don't have to go, oh, I do 10 pip stop loss, a 20 pip stop loss. I've even seen 30 and 50 pip stop loss. I don't have to do that. The market is telling you where the support and resistance is. The market is telling you where your stop loss is, okay? The market's telling you. All right, any questions, comments so far? Questions, comments, or testimonies so far? All right, I'm gonna keep going. Now, all right, so let's see here. So now, understanding this, okay, understanding. Now what we're looking for and what we're doing is we're going to do what's called time frame confluence. Don't do this without time frame confluence, okay? Now, pre-COVID era, you know, got it. We didn't always check it. I know. Some of you guys been hanging out with me for a while. Now, what we did is we added time frame confluence because you need to know where you are in the market, right? COVID had an impact on the market. Bottom line, it did. It impacts everybody, right? But so now what time frame confluence is, we addressed it, we analyzed it, but I just want you to understand the importance behind it, because the way the market moved. Now let me show you this. I can do 10 pips. Let's talk about where 10 pips is. Actually, let's do it this way. And we're gonna check that time frame confluence. And I'm gonna tell you why it's really, really important, okay? I'm gonna tell you why it's important. So this is where that activated, okay? You're not getting in a trade right there. Let's just be real. Let's just keep it 100% real. All right, you're not getting in the trade right there, because you have what's called a pip reaction time. You see it, you pick up your phone, open your MetaTrader 4, you push the button. How long does it take you to push the button, right? You got to be quick draw. So how long does it take you to push that button? I have literally seen, and this is another reason why we started doing time frame confluence. I have seen 5 pips for people to get into the trade from where they saw it activate. And I have seen up to 15 pips, right? That's just what I've seen since I've been educated. Now, what does that mean? If it took you 15 pips, let's look at that, to get into that trade, you entering a trade down here. You're not even getting in a trade to down here. And so now you understand, this is another reason why, it was about up in that area. So now this is another reason why you begin understanding why, knowing where that support and resistance line is. So if I pull it down just a little bit, we're pretty much on top of it. Now, this is already going 15 pips. So I can take my ruler, I can draw this and it went 37 pips. It did 20 pips. It did this. But did it take you 15 pips to get into the trade? How long did it take you to get in a trade? I want you to understand you're not entering a trade right here. You see it, you push the button, but where did you get into the trade? Okay. So your pip reaction time, don't Google it, I made it up. Okay, that's a word I made up. Your pip reaction time is very important. Okay, your pip reaction time is very, very important. So now, does it matter if you do 5 or if you do 15? No. What matters, though, you'll get better as you go along. But what matters is how the trade is going, understanding big picture, why we keep learning, that's what matters, Yeah, exactly. And the broker's point, you're going to enter the trade where you push the button, but the broker spread is going to be first. You have to cover that broker spread. So I'm glad you mentioned that, because I'm going somewhere with this. So that's important. All right. And then we're going to do the time frame confluence. So as you can see, like, because I want you to understand why it's important. So let's add the broker. So it took you 15 pips to get into the trade. Now my broker spread, right, is about 5 pips. Let's just say this is all hypothetical, So let's just say, actually, I'm gonna get a broker. I'm gonna just leave it right there because it's all hypothetical, right? But it depends on who your broker is. Okay. Now that means that all of this area has to be covered before you even get 10 pips. So honestly, what that ultimately means is your take profit is somewhere down here. Okay. Oh, I'm good. Look at that. Did y'all see that? So y'all take profit is somewhere down here. So this is why you hear me say all the time, 10 pips or your support and resistance line. Because if you have a 5 pip reaction time, you probably don't have a problem with your trades taking profit. But if you have a 15 pip reaction time, then you wonder why your trade turned around before you did your 10 pips, because you have to cover that spread. So, the broker is going to get paid too. So when you look at this, right, you see this happens, okay? This is where, when you're on your MetaTrader 4, this is the number that you would see on the left. Not this number. You're looking at the charts at this number, but this is the number where you actually entered the trade. And then you're trying to add 10 pips from this. Like you're trying to add or subtract, your 10 pips so you can take profit. Well, guess what? All of this has to be covered. All of this has to be covered, okay? All of this has to be covered. And so this is where we ultimately are. So now, technically, let's talk technically, okay? That's 33 pips that you had to cover to get your 10 pips. Cover your pip reaction time and the broker spread. Questions, comments, testimonies. All right. So now when I tell you support and resistance is your lifeline, it is your lifeline. Because in this case, you would have been okay because you see we're sitting on a support and resistance line. But this is ultimately what happens. Now, let's go ahead and do our time frame confluence. I'm going to take this off of here. But if I don't have, I want to make sure, actually, I'm going to leave it just in case you guys come up. You guys like questions like 5 minutes after I asked if you had a question. So we understand, okay? Let's zoom back in. Let's go ahead and zoom back in. We had our stochastic. Okay, blue line cross over the red and a downward momentum. You see we had a red candle with a flat top and we have that PSAR, right? So we have all of that in alignment. So now we're going to do what's called time frame confluence, because what helps your reaction time, what helps your pip reaction time, what helps that is making sure we're going with the flow of the market, okay? I need to be going with the flow of the market. So let's go ahead and let's jump up. So now here I am. I'm on a 15-minute chart. That means that my confluence is on the hour. So I'm gonna check the hour. Now, what is confluence? I don't need you guys getting caught up on words. Confluence simply means alignment. We know what an alignment is. If your car is not in alignment, what happens? If your car is not in alignment, what happens? Exactly. It does not go where you want it to go. It's exactly, you swerve left, swerve right, swerve. You're going everywhere but straight where you're trying to go. So what confluence simply means is alignment, okay? So now I need to know that I'm in alignment. So now if I look at this, okay, now honest to God, this could have been red or green or red, but look what's happening, okay? Now, I'm gonna tell you the truth. We're looking at a past trade. We're going to pretend that this was actually starting that cross down. We're gonna pretend that this was going back down, because honestly, when you're looking at a past trade, that could have still been going up and it could have been going down. Just imagine the stochastic like some rope, right? So you notice that it looks like this right now. If I look over here, let me put something around it so you know exactly what I'm looking at, right? Look at what your stochastic is doing right here, all right? You see what that stochastic is doing. But now, if I come back, like let's say this just pulls back down for a sell, if I come back, then what you're gonna see is it look different later. So pay attention to that. So if I'm looking at a past trade, right now we gotta make some sort of assumption. right? So this, it could have been still going up, or it could have been at that curve, you know, where you see that nice little sharp curve in the stochastic. So just imagine a string, the string really kind of just stay in its place or stay where you want it to be. Does it really just kind of stay there? It doesn't. What it does, you know, is it begins to kind of pull down. So you see where we are. So now, honestly, is now the reason I'm going into that much depth with you is because if it was starting to curve down, GBP has the most liquidity in the market. So I don't want you just jumping to do this, but GBP has the most liquidity in the market. So that means that I can do, and you know, there is oh, what's the word I'm looking for? That mean, but you know, and basically with GBP, I'm gonna say like this. I don't know why I can't think of the word I'm trying to say, but with GBP, that means I can drop down a time frame. An exception. Oh goodness, there is an exception to the rule with GBP because of the amount of liquidity that GBP pushes through the market, right? So now, blue line cross over the red and a downward momentum. You see where it pulled back up, right? We were coming down. And so if this is red, like if this is pulling down, and if this had already started its curve down, then I can literally come back. I mean, this pulling back, whether it was red or green, right? You can definitely see this was a nice green candle. This was a red candle. So it's pulling back. So what does that mean? I can drop down to my 30-minute. I drop down to my 30-minute. You know, look at what's happening right here. I definitely have a nice cross down right here, and I have a red candle. Do not do that with Euro. Do not do it with JPY. Do not do it with USD. So USD is the major currency pair. GBP has the most liquidity. That is why I can do that with that one, right? I can do it with that one. Questions, comments, testimonies? No questions, no comments, no testimony. Okay. So now I know that my higher time frame is in a sale. I come down here to my 5-minute. Let's look at that 5-minute. Come down here, it needs to still be selling. Remember, my higher time frames is where I'm going. My lower time frames is my activity and entry points. So when I'm looking here, I want this selling. So these time frames is where you really hone in, where you tighten up and you make sure it's going, you know, for those entry points. My higher time frames is understanding the market. So what we just did is analyze the BYOB cash out strategy. Now what I want to do is let's squinch it up. Let's squinch it up. Let's look at the market, okay? Because I'm going to tell you. Now you want to increase? Let's look at the 4-hour, okay? Now, I just walk you through the strategy. I'm going to give you a touch of top-down analysis, okay? But you have to understand that strategy first. If I know that I'm trading with the trend of the market, right? This is the trend of the market. This is the swing of the market. Now, obviously, the trend of the market is a lot deeper than me just saying it's the trend of the market. So we've trained on it. We'll continue to train on it. We'll continue to make sure you understand it. But just look at that 4-hour, okay? That's going to help you get that big picture. If I know I'm with the 4-hour, if I know I'm with the 1 hour, right? Then I know when I'm in a sale, I'm trading with the overall movement of the market at that point. So let's say you have a bad pip reaction time. Well, nothing is really bad. Let's just say you're not quick on the drop. Let's just say it takes you a little longer on the drop. So if it takes me a little longer on the drop, then I want to make sure that I'm with the overall movement, delay draw. They want to make sure that I'm with the overall movement of the market, right? And so, you know, if you turn around and you attempt to buy anything, like let's see, are we still in that, right? So we're starting to pull back a little bit. Stochastic kind of still strong. Let me delete that so we could get a good look at it. See, it's starting to try to curve. What is it going to do? We're kind of hitting on this area right here. So from a support and resistance line, kind of see what's happening, kind of see right up in this zone. But let's just hypothetically say this candle looked like these. So if it did, And now you come here and you see this buy, what you understand, remember, don't look at what we just saw. I want you to pretend like it was still strong red candles on that higher time frame. Then when you come to take a trade right here, you understand that you're trading against the overall movement. This is what you call a counter trend trade, okay? I'm trading against the overall movement. Now, that means that this would be a correction to what's happening in the market. Does it align? Blue line cross over the red upward momentum. I got a green candle with a flat bottom. I have a peace-out flip to the bottom. I have the BYOB cash out strategy. But when I check my time frame confluence and I check all of that and I do my time, I see where we are in the market. I'm trading against the trend, against the momentum of where the market is. Now, how many pips did it go up? Right? Went up 18, 17, right? Would you have gotten your pips? Obviously, but perfect practice makes perfect. A lot of people say, you know, practice makes perfect. That's absolutely incorrect. I could practice something wrong consistently and get perfect at being wrong. We don't want to be perfect at being wrong. So perfect practice makes perfect. You keep practicing doing things the right way, and that's how you end up perfect. So perfect practice. You want to create the right habits. Practice doesn't make perfect. That is, I don't know who said that, why it became popular, but that's got to be one of the dumbest things I ever heard. So no, perfect practice is what makes perfect, okay? Because you can practice something wrong, you can perfect wrong. We don't want to perfect wrong. We want to get in the right habits. We want to create the right activity. We want to create the right momentum, right? And so you need to know that if you take a trade, this would be against. If I take that buy, I'm moving against the overall momentum of the market. Questions, comments, testimonies. Questions, comments, testimonies. Anybody? Now's the time, because we just walked through a very detailed analysis of a trade. You want to drop it in the chat if you have any questions. No questions, no questions. Y'all don't have no questions? What? Say what? So, okay, here we go. Counter trend trading can only be considered with GBP. Did I get that right? So to put it in perspective, if I was going to counter trend trade, right, then GBP would be where I would consider it because of the amount of liquidity. So for example, let's just see here. Let's just see. So if there was a CHF trade, you know, you guys been with me for a minute, you know, CHF is not my favorite, right? They just, no ma'am, no sir. So CHF, right? CHF has the least amount of liquidity. So if I was gonna, do they have any trigger? Trying to see, because sometimes they'll trigger a CHF and I'll be like, say what? Say what? You know, it's just like, say what? Say what? So let's just come over here, right? Let me pull it over here. All right, so if I trade a CHF, I mean, now when we were getting our trades popping, we were on probably what, maybe 3, 4, 5, 6 month streak where, and this is on the call, like when we would analyze, be like, let's take this trade. We didn't hit any stop loss. We messed around and took a CHF trade. Somebody said, look at it. I looked at it, looked okay, and we hit stop loss. And then ultimately they had news. The time was different on the thing. They ended up with news while we took it. But the bottom line is I wasn't happy. And CHF has the least amount of liquidity. So that's why I told you guys, I want you to go back and watch that liquidity and volatility. So GBP average daily range is about 200 pips, okay? That's kind of where GBP hangs out. CHF in my books is about 10, I obviously it's gonna be more than that. But and I have the GBP one, so this one is obviously gonna be the most. But when you start measuring these candles and kind of looking at that, GBP is going to have more in there. But when I look at a CHF, if I was going to trade a CHF, it's going to be an alignment. Like I'm going to have alignment from the 4, the 3, the 2, the 1, the 30, the 15, the 5. I'm like, I want alignment across the board because there's no liquidity there. Okay. There is no liquidity. So if there's no liquidity, then what is the possibility or what is the chances of you really getting any pips? Now, GBP, now if it's like a GBP NZD, that has the most liquidity, right? GBP NZD has quite a bit of liquidity. So if I know that I'm trading, right, a GBP USD, then GBP NZD, that I know there's a lot of liquidity. So the probability, let me put it this way, I'm not saying that's what you trade, but the probability of you walking away with profits in a counter trend trade is greater than trading it or doing it on a currency that has a little amount of liquidity, right? So hopefully, that made it make sense. So GBP has the most liquidity. There is a training on the YouTube channel called Liquidity and Volatility in the Market. Go watch that training. It's really going to help put that in perspective. So it's in the Trading the BYOB Cash Out playlist, but it talks about liquidity and volatility in the market. And that's really going to make that, it's going to help with a lot of clarity, right? It's in that playlist. What happens is a lot of you guys see that playlist has quite a bit of videos in it. You'll see the Trading the BYOB Cash Out. Then you guys see the time frame confluence, then you stop. And those videos were put in there because they help. Like it's got some support and resistance. It's got a couple other things in there, but it helps. Like it's in there for a reason. Okay. And so that's why that's there. All right. So let me see. What's this next question? Whoever coined that phrase wasn't a trader. Now, whoever coined that phrase it's deeper than trading. Like I don't even know, but you're right, they weren't. But it's just, how people make sayings and they catchy and they catch on and they don't make any sense. So that's just one of them. So you always make the trade on the lowest time frame. Absolutely. So as you dig deeper, right, and you really begin understanding the markets, like people ask all the time, can I trade on the hour? You can analyze on the hour. I'm not looking at this and entering a trade, right? So if I see this in alignment, let's move my arrow right here. If I see this, please do what I want it to do. Please, please, please. I come down. This might be in a buy. Okay. It's not right now. That's why I was like, please be doing what I want you to do, but it's not. So if this was in a buy, you're going to have a lot of pullback. So I know here, right, I have that blue line cross over the red. It's continuing. Or, you kind of see where it's kind of, let's look right here. Let's look right here. That's a good question. So kind of drop down, start dropping down. Let's come on over. Look, they all going to be selling right now. They're just all going to be doing not what I want them to do. Okay, so these would be obviously good trades. So for a sale. But what happens is if you drop down and you see where that's selling, so, and because that's why I'm like, you'll start to see how the time frames play together. These time frames play together. That's what they do. And so you see this trade here, you see that sale, but then at the same time, as I begin to drop down, what happens is if this starts buying down here, then I'm not entering a trade until that correction. And just to go deeper into your question, that's why so many triggers happen on a 5-minute, because you see how much more candles, how much more activity happens like in that 1 hour candle. Just think about the amount of 5-minute candles you have. So all that activity is where it's tapping on the support and resistance lines. And so what it's saying, that's why when you do this trigger, you still have to analyze the top time frames. And that's why we do that on those morning calls. Okay. That's why, we're walking you through it from that perspective, like for you to really grasp and understand it. So good question. Good to know that the exception to the rule you stated earlier. Okay. You connect. Awesome. Got that other question. We always secure the bag. What you mean? We secure the bag. That's all we do. We anointed for wealth. So, but now, do you have a YouTube video on risk management? I talk about your trading plan. There is a video on your trading plan. There is a video I mean, every call is about securing the bag. Like every video is about securing the bag. I mean, even our radio broadcast is about making money. So every single thing we talk about is about making money. But it's we really focus on skill set. I mean, the biggest thing is the skill set, because when the money's gonna come. So there is a call though. I have to think of the name of it. There really is a call that we did that is like, don't chase the profit, chase the skill set. That's not the name of it. But it really talks about, and I think it's in that same playlist though, trying to be Byobcashout. So, you know, where it might be, oh my gosh, it might be basics. I have to look at the playlist, but if you kind of scan through those videos in a playlist, it might kind of stick out. But it just really kind of helps you focus and understand that you want to chase the skill set. Because think about it from this perspective. We get so caught up in, oh, I need to make X amount of dollars, or I need to, you know, I need to make, you know, we get excited, $100 days, you know, Miss Anderson's on here talking about the 6 figures in 6 months, because we've gone over the compounding sheet, but she was able to bring it in and break it down to where you guys saw it, you know, where you can see like, okay, 6 figures, 6 months, I can do this. Let's really go dive in. Wait, where's the compounded sheet again? You know, been on YouTube, been on the website, been in a Facebook group for like 2 years. But when she came in and really broke those numbers down and are showing you the numbers, you're like, oh my gosh, wait, I can do this. And so you guys just get focused on the 6 figures, you get focused on the $100 days, right? You get focused on that, but you forget the skill set. And that's backwards. You have to focus on the skill set. And so what that video does is we just really show you, because think about it. Let's just use what everybody's looking for. Everybody's looking for $15 an hour, right? They think they're going to be rich off of $15 an hour. That's 25 cents a minute. Let's be real, 25 cents a minute. So when you come in and you take a trade, and your trade, right? You take a trade, and your trade that you took a minute or so to take, and that trade is $5 or that trade is $2, you know, just really think about that, okay? You just made, you know, let's see, you just made $5 in that trade times 60 minutes, you know, that's $300 an hour. Let's really put that in perspective. So what happens is though, people get so discouraged. If you just kept taking trades, that's what it equates to. So you get discouraged, but I only made $2, $3. Well, you got to start somewhere. You're not going to start at $100 days. You're going to start at 60 cents. You're going to start at $2. You're going to start at, right? And you're going to build from there. You'll get that consistency and understand that that skill set is what's going to get you those trades, right? You know, that's what those are going to bring you. All right. So you guys got some good questions tonight. See, that's what I told y'all when I asked for it at first, y'all was going to wait till the end of the call to bring me all the questions. So how do you identify the strongest support and resistance line that you lead with that will believe a breakthrough in a certain direction? First and foremost, go watch the psychology, you know, go watch that training where we market psychology. I need you to go watch that training. And then you need to watch some market structure. So that's what we do on the Thursday night calls, is really get deep. So it's not about this. One thing I want you guys to understand is the support and resistance lines don't make the trade. The support and resistance lines, you know, if we look at them, okay, we look, that's actually not support and resistance. Let's come over to one of these. So one that was already a coloring book. Support and resistance lines, when we look at our support and resistance lines, I'm gonna come up to the monthly chart, okay? And I want you to see, right, where that, so right now, every candle is a month right here. So every month is a new candle. So look how far this goes back. This goes back to 1994. And I want you to look at this. This is GBP USD. Look at this, look at this and this support and resistance line. Look at where we are. Let's just look at where we are. So on the monthly chart, it hit here, it tapped here. You see how the market is reacting in this area, okay? So support, but this is gonna be a support and resistance line always, all right? And this is gonna be a support and resistance line always, right? Right up in this area. I can technically put it on Well, I'm not going to do that for the sake of time, but I can technically kind of put it here around that psychological level and look at how the market is reacting to this support and resistance line. So think about support and resistance as stop signs, right? Think about support and resistance as stop signs. You know, this just because, okay, let's put one right here. Where my line go? Where it takes $1 exactly to buy a GBP, right? Obviously, that's never been the case. Well, I'm not going to, you guys get the point. That's never been the case. So this is when it got on the charts. It's never been here, but that doesn't make it not a support and resistance line. Is if I get technical, okay, you need your support and resistance, okay? So I need it. And matter of fact, I'm gonna just do this. So let's just type it in, right? So now we're dead on. That is a psychological level, right? That is a psychological level. It's a psychological level, but the market has never touched this. So don't use the support and resistance lines to determine your trades. Analyze the market and then use the support and resistance lines to help you understand where you are in the market, okay? Make sense? Because I've never been down here, but that doesn't stop it from being a psychological level. So that's what it is. Now, what's my next question? Because we're about to transition this call. This is really genius. Thank you. You're welcome. Don't despise humble beginnings. Exactly. I'm happy that whatever I win because exactly. All right, guys. So, you know, what we've done tonight is we've really just kind of dove in and we broke down, we just analyzed the trade. We analyzed the trade and we focused on the basics. We really focused on the basics so you understanding the significance. So there are levels to this thing. So if you're new to this, you want to make sure you go through that academy. You want to make sure you're understanding. You want to make sure you can do your 10 pips and cash out, start analyzing from the 15-minute chart and make sure you do your time frame confluence. After that, you want to make sure that you continue, right? You want to make sure that you continue to develop your skill set. All right, continue to develop your skill set to where you begin to now incorporate support and resistance lines. Those psychological levels will help you, right? They will help you in understanding the market because it'll help you see clear where those support and resistance lines and begin to understand where you are in the market. I promise you, you guys do that, utilizing these tools, you're going to be in a winning situation. And then you start focusing on that when you come back next week and Miss Anderson is back here on Tuesday night. Guess what? You're going to understand how you get those 6 figures in 6 months. Because when you grasp this, you grasp that, right? You grasp this, you grasp that. So with that being said, ladies and gentlemen, right? With that being said, this was excellent training. Thank you. You are welcome. With that, it is time to transition this call. So don't go anywhere. So you want to stay put for the next 30 minutes. And then you want to make sure you're back up at 5 o'clock in the morning where we're going to implement everything that I'm talking about and we'll be back on the line. All right, guys.